Hi everyone, welcome back to another video. In today's video I'm going to go over my top 5 dividend paying stocks in my portfolio. Before we get into today's video guys, just a few things beforehand. One, if you could please subscribe to my channel if you haven't already. I want to go to get to 2,000 subscribers, and at the end of this video, definitely if you like the video, give it a thumbs up and get in the comment section and engage. Let me know what you think. And also I'm announcing the winners from my obviously I said in my last video I'll announce the two people who comment. I'll announce them as winners at random. So the first channel is Josh from over at Dividend Bloodhound Investing. Great channel. Does obviously UK based investor, does a lot of similar content to myself, regular portfolio updates and in general investment talk, stock talk. Definitely consider checking out his channel guys, really great. Obviously I like to support fellow UK and relatively small YouTube channels as well, so yeah, definitely go and check out Josh's channel. And the second one is another channel, another UK based investor, Inkmatic. Again, UK based investors, talks a lot about investments and portfolio updates, in general similar content to mine and Josh's. So those two channels, I'll be linking them in the comments or the pinned comment or the description below, so definitely go and check them out. So yeah guys, now into the topic of today's video. I'm going to go over my top 5 dividend paying stocks in my portfolio. Obviously these are just 5 that obviously I own around 20-30 stocks, but these 5 are just sort of ones that are my personal favourites. So the first stock that I'm going to be showing you is ABBV. ABBV, pharmaceutical and biotech company. I'm not going to go into much about the company, just sort of going into the yield guys. So we'll check out ABBV's dividend yield. We'll click over to there. This is taking a little while, but we'll get there. Here we go, ABBV's dividend yield. ABBV's current dividend yield is 4.9% and it gets a 3 out of 6 score on the Simply Wall Street app. So it has the first point, has a 4.9% dividend yield, which is higher than the bottom 25% of dividend payers in the US market, so which average at 1.5%. Score number 2, it's in the top 25 dividend payers of the US market, which average at 4.28% yield, which is good. So now we get on to the 3 blotches on the scorecard. The first one is dividend payments have been stable, but ABBV has only been paying dividends for less than 10 years. So relatively new company still, guys. But so obviously they haven't been paying dividends for that long. So if Simply Wall Street sees that as a blotch on its scorecard. Then next, its payments have increased in the last year, but only been paying dividends for 8 years. So it's a good thing that they have been increasing, but obviously again it goes back to the last point. They've not actually been paying them for 10 years or more. Score number 5, with its high payout ratio of 101.7%, average dividend payments are not at well covered by their earnings, which obviously is a bit of a concern. And then the final score, ABBV's dividends in 3 years are forecast to be covered by the earnings, with a payout ratio of 44.3%. And with ABBV, if you own just the one share of ABBV, you'll be getting 118 cents per quarter and an annual yield of $4.72. So if you just bought the one share, you'd be getting that annually for the foreseeable future, which is good. So you don't have to put any more money in, you still get handsome dividend yield. So that is the first stock on the list, the ABBV stock. Obviously I own that in my current portfolio, and I feel like it is a great obviously it's a great buy, probably one of my highest dividend pay. I own around 6 shares, so I usually get around maybe £5 every quarter each month without even investing any more money. So again, it's a good one for cash flow. So the next stock on the portfolio is Johnson & Johnson, ticker symbol JNJ Stock, pharmaceutical and biotech again. We'll head over and check out their dividend yield. So Johnson & Johnson get a 5 out of 6 score on the Simply Wall Street app, and they have a 2.71% dividend. So as you can see, the dividend is higher than the bottom 25%. Obviously it's quite low considered some of the top 25% payers, but the yield isn't be all and end all, guys. Score number 3, the dividends per share have been stable the past 10 years, so no cuts or anything like that, which is good if you're looking for a good dividend growth company. Again, the growing dividend, Johnson & Johnson dividend payments have increased in the past 10 years. Always good that obviously a company who increases the dividend is really, obviously it's a good sign if you're picking dividend stocks. A reasonable payout ratio of 66.9%. The dividend payments are covered by their earnings. Again, that's good. So they have a lot of cash flow to distribute out for the dividends. They're not relying on anything else. And the final score in 3 years, obviously, again, forecast to be covered by their earnings. So Johnson & Johnson, really good, solid dividend king. Obviously been around for a long time. And if you own just the one share of Johnson & Johnson, you'll receive 101 cents every quarter and $4.4 every year. So Johnson & Johnson, again, good solid yield, everything's well covered, and good cool thing, the Simply Wall Trade, that's free trade and Simply Wall Street's baby. Anyway, so they have an ex-dividend date of in the next 6 days. So if you purchase a share now, you'll be getting that dividend 15 days from the ex-dividend, which is on the 8th of September. So guys, that is the second stock on my list, which is Johnson & Johnson. So now we'll have a look into the third stock on the list now. We'll head back over to the portfolio. So the next stock, which is on the list, is Coca-Cola stock, ticker symbol KO, in the food and beverages and tobacco industry. So head over to the dividend yield, and the Coca-Cola, they get a 5 out of 6 score, similar to Johnson & Johnson. Again, dividend king with a 5 out of 6 score on the Simply Wall Street app, and the current dividend yield is 3.4%. So again, I won't take a look at every single score here, but the one blotches, they get a low compared to the top 25% payers, which average 4.2%. But again, you can't argue with the dividend king, guys. And also, obviously, the dividends have been stable the past 10 years. Dividend payments have increased again for the dividend growth. And also, the earnings, the dividends are covered by the earnings. So again, Coca-Cola, no issue with Coca-Cola. Obviously, Warren Buffett is a big advocate of this stock, owns a lot of shares in his portfolio. Obviously, if you know Warren Buffett, obviously one of the best investors of all time. Huge portfolio. And again, upcoming dividend payment for Coca-Cola. So if you buy in the next 27 days, you'll receive the upcoming dividend, which gets paid on the 1st of October, 17 days from the ex-dividend. So if you own just the one share of Coca-Cola, you'll be receiving 41 pence per share and an average of $1.64 annually. Again, another great stock, one of my favourite dividend paying companies in my portfolio. So that is the Coca-Cola stock, guys. So we'll check out the next stock on the portfolio, which is SBUX Stock, ticker symbol SBUX. Again, consumer services. And the dividend score, they get a 4 out of 6 score on the Simply Wall Street app. They have a dividend yield of just over 2%. So they're higher than the bottom 25% of dividend payers in the US market. Obviously low compared to the top 25. I don't really see that as a poor I don't see it as a bad thing, really. Obviously, I usually in between a yield of 2 and 6%, maybe a bit high, just depending on the company. The dividends have been stable in the past 10 years. Again, that's good. Starbucks dividend payments have increased as well in the past 10 years. Again, dividend growth. But they have a high payout ratio, which aren't covered by earnings, which is obviously, again, not the best thing. But with its forecast in 3 years, the earnings will be covering the dividend. So again, with Starbucks, another great stock I like to own in my portfolio. If you own just a one share of Starbucks, you'll be receiving 41 cents every quarter with an annual dividend of $1.64. So again, Starbucks, great stock to own. I have quite a few shares, I think around 4 or 5 shares in my portfolio. And what another company I think will be continuing to grow in the future. So that's the Starbucks stock, guys. So the next stock, which is on my portfolio list, is AT&T. AT&T in the telecoms industry. Again, another one of my great dividend paying stocks. This yield is on the higher side. They have a 6.9% dividend yield, and they get a 5 out of 6 score on the Simply Wall Street app. So obviously higher than a lot of the dividend payers in the US. The dividends have been stable the past 10 years. Again, that's good. The two in the middle guys I like the most. Obviously, if you know they've got a stable dividend, they've not cut them, and also that they're growing. That's the key thing. You don't want a dividend that's going to be stagnant. You want it to keep growing as your investments grow. We've got a high payout ratio, which aren't covered by the earnings, of 126%. But the future coverage of dividends is looking a lot brighter, with a 64.4% payout ratio, which has to be well covered by their earnings. And if you own just the one share of AT&T, you'll be receiving 52 cents every quarter and $2.08 annually. I think AT&T one of my highest positions in the portfolio. Big advocate for them. Obviously the debt is a bit of a concern, but I think they are sort of getting under control. And I think usually with them as well, anytime they get under that $30 mark, I'm looking to buy. So again, a great dividend stock to have, just on that borderline for the high yield, but they're not looking at cutting it anytime soon. So that is the 5 stocks, guys, in my portfolio, which are my favourites. So just a bit of an overview. So we've got ABBV, Johnson & Johnson, Coca-Cola, Starbucks and AT&T. Obviously, I do own a lot more stocks, and I've got some other favourite ones, but these just sort of stuck out to me. It'll probably change in a few months. I might do another video of updating you on my new dividend stocks, which I prefer now. But I'll be probably doing another video of my top UK dividend stocks in the near future, part 2. I did one a good few months ago, which I'll link in the description again. You can check that out, my top UK dividend stocks. So yeah, anyway guys, so let me know what you think of today's video. Let me know what you think of these stocks, if this has persuaded you to buy them or buy more. If you like the Simply Wall Street app, just let me know. Yeah guys, get in the comments and engage, let me know. Also, congrats to Dividend Bloodhound Investing and Inkmatic, who again I'll link their channels in the description below. So yeah, definitely go and check them out. So on that note guys, I'm going to leave you today. Hope you enjoy the rest of your days. Take care.